Now, as I have talked about here on this channel over the past week or so, I do think a Tesla stock short squeeze has started. Now, I know a lot of people are going to say, this doesn't look like a short squeeze. Like, how can you say that with any degree of confidence? And I can. Long story short, I'm going to show you how we know that a short squeeze has actually started happening over the past 3 days or so. Now, today, Tesla stock was down about 1%. So, this is an awfully strange day to be talking about the short squeeze that Tesla is currently experiencing. With that said, I will share some of my price targets with you, where I think Tesla stock is likely to go before the October 10th event, and then proceeding after the October 10th event. Now, I will also tell you here in this video, I'm a bear. I don't think markets are accurately priced. I don't know if we're going into recession, but I know we're going to slow down. So recession or not, I think markets are mispriced, okay? Because the trajectory we are on is of a weakening economy. It doesn't matter if we don't go into a recession. If we come close to it, markets are not priced for that. Even if we just slow down, markets are not priced for that. Markets are absolutely priced for perfection. Certain areas of our markets are not. So if we avoid a recession, and I just want to say this part right from the start, if we ultimately avoid a recession, there's certain areas that have upside from here, like Tesla, like cyclicals, like small caps and interest rate sensitive names. Some of these stocks are already priced as if they've went through a recession. Tesla's still down 45% from all-time highs. Dollar General or CVS or any other consumer discretionary stock is not in a good place. But then you look at the S&P and it's at all-time highs. Most of that is just skewed because of big tech. Okay, so there are pockets of opportunity in this market, even if we do have a soft landing, and even if we meet expectations in the markets, you're already priced for that. You're already priced for 20% EPS growth next year. Like, there's not much upside in the S&P, no matter which way the economy goes, especially if it gets worse from here. Then you're just really mispriced for the downside. Okay, so I think Tesla will benefit from that aspect. You're already priced as if things are not good via the decline from all-time highs. And again, some other areas are also priced that way. So it's not just Tesla, it's other areas. But if we actually, get a soft landing, then I think these areas will benefit the most. Okay, so I want to say that right from the start. Now, today's data actually enforces the soft landing narrative. I'll give you a brief rundown of what the data looked like today and why I think it supports a soft landing. Now, I also want to say my personal opinion is this data is not very accurate. It's probably dead wrong. But from Wall Street's perspective, just looking at the face value of the data itself, Wall Street's going to assume it's correct, that it's accurate data. And if you're assuming this is accurate data, then the soft landing case just got a lot stronger. Durable goods orders month over month came in at 0%. The estimate was negative 2.6%. Last month was positive 9.8%. So if we look at the history of durable goods over the past couple of months, you were flat really from February through May. You had a 6.9% decline, then you had a 9.8% recovery. So that's not super impressive because that big decline, you're still on net positive 3-4% or so. And then, for August, you were at 0%. So is it the best data in the world? Of course not. But according to this data, it's saying the economy is not in free fall. Also got the GDP growth rate for Q2 that came in at 3%, higher than the 2.9% estimate. Again, if you were already in that soft landing camp, this data is really just reinforcing that thesis. Initial jobless claims came in at the lowest level you have seen since May of this year at 218,000. Yes, you're still overall elevated. You did see a spike in initial jobless claims, but some people try to say that this is like the tell-all be-all of the labor market. I mean, this is still 218,000 initial jobless claims, like people every week filing for unemployment. Like this is still not good. Okay, let's just face that fact. That's still not good, and it doesn't tell you much about what actual non-farm payroll numbers are going to be or what the unemployment rate is going to be. It's just saying that things are not deteriorating in real time. Like things are not falling through the floor, but it's not really telling you if things are bad or good for that measure. Okay, so just to kind of square that away. Fed Jerome Powell didn't get much out of Powell today, literally nothing at all. The manufacturing data was really the weak spot of data today. Kansas Fed Manufacturing Index came in at -18. The estimate was +9, so that was a huge miss. The Kansas Fed Composite Index came in at -8. The forecast was +2. Big miss. The question now really is, what's the deal with factory jobs? What's the deal with manufacturing? How bad are things going to get in the manufacturing sector? How many layoffs are you going to see there? How does that spill over into other sectors? Because when you get layoffs, it's much of a trickle-down effect. Like imagine that factory worker that works at GM or something. I know a lot of them. If they all of a sudden get laid off and have to find a new job, and maybe it's hard to find a job that was comparable to their factory job, then they're going to spend less at restaurants. Those restaurants are going to have less money to employ people and so on and so forth. It's really just a trickle-down effect at that point. So really, if you start to get a lot of joblessness, even in one area of the economy, especially something like manufacturing that is very Main Street oriented, that can start to become a larger snowball issue. So definitely something we want to be watching for. And perhaps that's why the markets were a little bit on the weaker side heading into the end-ish of the trading day. Now, all of this is important specifically for Tesla in regards to the short squeeze that I think Tesla is currently within, because the kryptonite of this market, the kryptonite to Tesla, the one thing you do not want to see happen between now and October 10th is bad data, bad news on the economy, and reinforcing a hard landing. So the data we got today reinforcing a soft landing, I don't give a rat's ass what happened with Tesla stock today. The same thesis is true from yesterday because the data came in good, at least, from the government data that we get, which I don't think is accurate, but my opinion, again, does not matter. So from that standpoint, Tesla stock is likely going to do very well. Now, the big news today that sent Tesla stock down is an insider, the CFO sold $2 million worth of Tesla. He probably sold that to buy himself a boat or a couple of snowmobiles or something just stupid that, Wall Street's freaking out about. He still owns $28 million worth of Tesla stock. So yeah, it was a decent size sell order, but is that something to really get your, things in a bunch over? Probably not. I have a very strong feeling this is going to be news that is here today, gone tomorrow, and Tesla stock's going to continue that upside rally. Again, because the economic data came in good today, we do have some data coming out tomorrow that is also vitally important for markets, and I'll share that with you as well. Tomorrow's data is core PCE month over month. Let's be honest, unless PCE comes in high, I really don't think PCE is a market moving catalyst to the upside at least. I think you're already kind of priced in for, good PCE. You could get surprised if PCE comes in higher. That could be a negative catalyst. But if PCE comes in low, like how much upside is that going to give markets that are already priced for perfection? Probably not much. So really the big catalyst for tomorrow morning is personal spending. We're expecting personal spending will come in at 0.3% positive. Last month was a 0.5% positive. So if that number comes in weak, then that's not good, because durable goods orders, yes, that's important. That is refrigerators, or that is, different durable, products. But personal spending is a larger barometer of consumer behaviors, okay? So personal spending is going to tell us a little bit more on the state of the consumer, how people are spending money, and just how weak or strong things potentially are. So as long as personal spending comes in good tomorrow, then I think markets are going to be able to do their thing, and this broadening out is likely going to continue. Now, personal income's another pretty interesting one. I do think incomes, you want to see that come in high just to kind of try to catch up to the cost of living. So the higher the better. I don't think the markets are super concerned about a wage price spiral at this point either. And we're expecting 0.4% month over month for personal income. Last month was 0.3%. If we take a look at option activity today as well, really over the past 4 days now, you've seen option activity very elevated for Tesla. And even though Tesla had a red day today, take a look at this option activity. You've seen 156 different trades today, totaling $83.4 million with a positive order value of 78%. There's a lot of positioning for early October, mid-October, around the 280 to 325 call area. That's where a lot of that option activity is coming in. These are out of the money trades. These are very bullish in nature. If you're only kind of bullish on a stock and you're a big money investor, you're going to buy a call that's in the money, right? If you're buying calls that are out the money, that means you're expecting a larger move to the upside. So I do think some of the option activity that we have seen is reflective of a larger upside move that people are expecting. Now, as I've also reported here on this channel for the last couple of days, short interest is actually starting to fall now. Even just from yesterday, you were at 2.87% short interest. Now you're at 2.78% short interest. Okay, you're at 2.85%. Now you're at 2.78%. I don't know if I said that weird. The dollar amount currently sold short at 19.84 billion. You have 77.19 million shares currently sold short. Over the past couple of days, shorts have covered about 3 million shares. Since early September, shorts have covered from 90.2 million shares down to 77.2 million. So about 13 million shares have been covered in that time frame. Now, over the past 3 days specifically, you've seen millions of shares getting covered each and every single day. Even yet again today, you're seeing about 1.3 million shares that are being covered on. And I do just have a crazy feeling that you're going to see more shorts covering heading into October 10th, especially because, guys, we just got a 50 basis point rate cut. Wall Street is dead set on soft landing. China growth is accelerating. We really don't know how well the US is doing or how bad the US is doing because we don't get that much data, but we're expecting a very strong quarter. Like, you put all these things together with a Robotaxi event coming up, and we were at $271 per share on July 11th. Why September 26th is Tesla only $253 per share? Doesn't make a whole lot of sense to me. I think some hype is deserved. I do think if that made sense then, higher prices can make sense now. So I think to the upside, I'd be very surprised if you did not break above 280 and head to 300. Now, above 300, really 320 is the level that I think Tesla stock will get to before October 10th, as long as we don't have any exogenous negative event in the economy, as long as we do not have, some kind of shock event or really bad data or something along those lines. I do think between now and October 10th, you're likely headed between 300 and 320. Now, anything above 320, you're getting well into squeezy territory. 350 is possible, although I think that is on the unlikely side. Now, after October 10th, I am expecting a sell the news event. I do think an election correction is likely coming in the second half of October. And, around the election or after the election, I do think economic data could start to come in worse. So all of these are headwinds at this point. But from now until October 10th, I really don't see much to stop Tesla. And I think if you are bullish on Tesla, if any of this information makes sense, today could be an opportunity. Could have been an opportunity. If tomorrow's another red day, I think that's definitely an opportunity, at least in the very near term. But ultimately, I do think whether or not Tesla stock does well or not is going to come down to the economy. And at this point, I think for the people saying we've achieved a soft landing, they're full of crap. We don't know, if we're going to have a soft landing or hard landing at this point. Hasn't been enough time. And that's ultimately what's going to dictate whether Tesla stays in the 200s, goes to the 300s or new all-time highs, or falls into the 100s again. So with that said, let me know what you guys think about this information down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. You guys have a great rest of your day, and I will see you in the next one.